Fed rate rise looks to be on the cards. Thank you for joining us for another Bank of Cardiff newscast. With the US economy on the up and consumer confidence cautiously increasing too, a December rate rise is looking more and more likely. In November, the Commerce Department reported that GDP grew at an annual rate of 2.1% over the July-September period, up from a previously estimated figure of 1.5%. Although this still represents a slowing in growth from Q2, it still may tip the balance when the Federal Reserve considers hiking interest rates for the first time in 9 years. Fed Chair Janet Yellen had already signaled the possibility of a rate rise to Congress at a testimony before the House Financial Services Committee on 4th November, just weeks after ruling out an October increase. When asked then about whether the risk of raising rates in December would outweigh benefits, Yellen refused to be drawn, but admitted that an increase remained a live possibility. The minutes of the Fed policymakers' last meeting recorded that December could well be the appropriate time to initiate the normalization process, with few dissenting from the overall consensus. The minutes went on to say that the U.S. financial system appeared to have weathered the turbulence in the global financial markets without any sign of systemic stress, and that most participants saw the downside risks arising from economic and financial developments abroad as having diminished, and judged the risks to the outlook for domestic economic activity and the labor market to be nearly balanced. The chances of a rate rise are bolstered by economists' predictions that an ongoing rebound in the jobs market, together with receding gas prices, will continue to fuel consumer spending and elevate GDP growth in the current quarter to 2.5% plus. If so, this would represent a clear improvement on an average baseline rate of economic growth of around just 2% since the end of the recession in 2009. Well, this kind of steady growth isn't necessarily a bad thing, and it could be argued that a lengthy period of modest growth may dampen the tendency for overheating in a more buoyant market. Consumer spending actually rose over the third quarter at a rate of 3%, but on the flip side, a stronger dollar and weaker global demand dented figures. Although a rate rise isn't assured, with less than a month till Fed policymakers meet again, it certainly seems like it's very much on the cards. In her testimony to the committee, Yellen added, "What the committee has been expecting is that the economy will continue to grow at a pace that's sufficient to generate further improvements in the labor market and to return inflation to our 2% target over the medium term." If the incoming information supports that expectation, then our statement indicates that December would be a live possibility, but importantly, that we have made no decisions about it. That's all for now. Join us later this week for another Bank of Cardiff newscast, and remember that all our newscasts are available on our website www.bankofcardiff.com/newscasts.